All right. So everybody has one, but they're not always good, but you can make it better. How you doing? This is Mike Evans from the Choice Realty Group at Keller Williams. And Nick Christy from CMG Home Loans joins me today to talk a little bit about credit, what it means and, how we can manipulate it to help us, when we're trying to purchase a house. How are you, Nick?
I'm doing well. How are you, Mike?
I'm good, thanks. So tell us just exactly what is credit?
So credit scores are the indicator to lenders when you go borrow money for a car or a house. It tells us how well you take care of your finances, essentially. Credit cards, if you miss payments, things like that. So it's very essential to do the right things to show, your best ability.
Gotcha. So what are best things? What can we do to help
Yeah.
improve the score?
Yeah, the number one thing that I see, so I'm pulling a ton of credit scores, every month, probably 40 to 50. So I see a ton. And the biggest problem we see is credit card debt. It's crazy how much credit card debt people can rack up and then just make the monthly payments on. So the ideal situation is to use credit cards. Do not use credit cards. You have to build credit, but you want to keep the total utilization under 30% of what it could be. So if you have a Capital One credit card with $1,000 limit, you should never have over $300 on that. But you should also never have $0. You just want to keep it in that sweet spot from 1 to 30%, and it will absolutely help your credit grow. But anything higher will hurt your credit.
So let's talk about that. So I use my credit card to pay my online bill, my whatever. And it comes in at $120. And then once it comes to me, I pay it off immediately. Does that help or does that hurt?
I pay it down to $1. I pay my stuff down, but I don't. Again, I'm not a credit repair guy, but I'm always told you keep it between 1 and 29%. Is it more ideal because credit card companies report to the credit bureaus once a month. If you have a zero balance on that day, you're not getting credit for you using it that month. But also, if you 90% of your total, that's going to hurt you even worse.
All right. So 30% credit utilization with your credit cards. Anything
Yep.
else we should know about credit?
Yeah, so it's great if you can buy a car cash, that's awesome. But having an installment loan, like a student loans are an installment loan, auto loans are an installment loan. This means that you have a finite number of payments on it, and it's an exact payment every month. That's an installment loan. Having those do not hurt you. Missing a payment can't 30-day lates on anything kill you. Never have a 30-day late. Set up auto pay is for everything is my biggest advice.
How about rent and utilities? Do those typically affect your credit?
You can. I know big apartment complexes will give you an opportunity to report your rent to the credit bureaus, which can absolutely help. You can what's the word? I've pulled a lot of credit where they're self-reporting utilities. So you can absolutely do that to help bill as well.
Gotcha. Good tips. Good tips. And ideally, if we're going to buy a house, where should our credit score be? Yep.
Ideally a 660, 700. You're going to start to get great, better interest rates. You can have a 580 middle score and maybe get an FHA loan, but we're talking interest rate differences when you're a 780 and a 580. I mean, it the amount of money you pay more than that perfect buyer is so significant just because you're not taking care of your credit. It's just not worth it.
Yeah. How accurate are those credit websites? Everybody belongs to one.
It I have one that is pretty accurate. And then I have about four or five that are just so off from what my real mortgage score is. Mortgage scores are different than what you're going to see on your credit app. And I have a lot of people call me say, yeah, I'm looking at 700. I know that person's probably, 660. When they tell me they're 620, I'm worried that they're not going to have that 580. So be mindful of that.
Gotcha. So keep on top of it. Stay under 30%. Make all your payments on time, or at least within 30 days, so you don't get reported, and you'll be good to go.
Yep,
Great. Well, thanks for your time, Nick.
absolutely.